What's good, trading family? Wildcard back on the Saturday deep dive. I've got TB across from me, and we are about to walk you through one of the most violent rotations of the year. A week that looked calm on the surface, but was an absolute hand grenade underneath. The index lied to us all week. SPY finished up just 0.28%. The VIX got crushed 9%, closing at 1599. If you looked at those two numbers, you'd think it was a sleepy summer week. It was not. Microsoft ripped 19%. Amazon tore up 15%. Google added 9.5%. And somebody ate that bill. Micron down 11.75%. AMD down 9.75%. Coinbase down 10.5%. Those names got smoked to pay for the artificial intelligence winners. In one line, the market paid up for artificial intelligence earnings and made everybody else foot the bill. Three names carried the entire index, while the other 500 got sold to cover the tab. And we're going to unpack every piece of that grenade. TB, you want to add anything right at the top?
Just one thing. The VIX is the third lie. The fear gauge closed down 9% at 1599, but if the tape was a war, why is it so calm? Because the VIX only prices options on the S&P itself. It doesn't see Micron down 12, Coinbase down 10.5, or the Kospi ripping 17.9%. So the index lied. The VIX is that same lie wearing a hat. It confirms the whole thesis. The calm surface hides the violent rotation underneath.
That's it. The VIX is blind to all the single stock carnage and blind to what happened in Seoul. Friday, Seoul rang the loudest. Kospi exploded 17.91%, its best single day on record, as Samsung and SK Hynix surged more than 20% on the back of Amazon and Microsoft blowout earnings. TB, you've been calling this all week. Own this segment.
The Kospi melt-up was not a conviction trade. It was a balance sheet event, plain and simple. When the plumbing is that concentrated, any forced move gets amplified like crazy. The price screamed euphoria, but the structure said forced. And this didn't happen in a vacuum. That same force leverage that hit the Kospi is the exact same force that liquidated the Aschenbrenner fund and drove Coinbase down 10.5% while Bitcoin barely moved. It's the same grenade, just wearing a Seoul jersey. The price made headlines. The structure told the truth. Balance sheet, not belief. Grenade, not bull market.
That's the piece that makes the whole show one story instead of 6 segments. Korea, Aschenbrenner, Coinbase, all leverage getting cleaned out through the same pipes. Now let's pull the pin on the bigger one. The Aschenbrenner Fund, $45 billion. Built by a former OpenAI researcher on one thesis, the artificial intelligence build-out, mostly gone in days. That's a margin call wearing a turtleneck. A margin call doesn't care about your credentials. When the smartest artificial intelligence money in the world gets forced out of the same names it pumped up, Micron and AMD become the invoice. And Coinbase, down 10.5%, while Bitcoin only gave up about a point. That's not crypto selling. That's the market selling the risk proxy, while the asset itself sat still. Even crypto got told who the winner is and who foots the bill. Here's the quiet gut punch. And it's the real horror story. The winners are bleeding to build. Amazon, Alphabet, Tesla all reported negative free cash flow. Meta's cash generation fell 91%. The biggest advertisers on Earth cut cash generation by 91% to buy GPUs. The build-out is eating the builders. The market rewarded the artificial intelligence story and ignored the bill. Aschenbrenner is what that bill looks like when it comes due early. And underneath all of that, the Fed did the scariest thing of the week, and almost nobody heard it. They held rates, but 3 officials voted to hike. Kashkari, Hammock, Logan, under chair, Warsh. The 10-year yield spiked to 4.74%, up almost 2% on the week. Warsh asked the market to speak, and the market answered in 2 different languages. Stocks said, "We'll pretend this is fine." Bonds said, "No, it isn't." Earnings are the past, rates are the future, and that disconnect is the August problem. Oil. The war premium went in and came right back out. Exxon and Chevron printed profits on Iran headlines. Glencore traders ate. All the noise said escalation. But West Texas Intermediate crude slipped $1.45 on the week, settling at $84.67, down about 1.7%. The market read the conflict and said, "This is a trade, not a trend." The energy sector, ETF gutbook, stays on supply premium. The war premium part of that trade is done for now. Now, the structural story you might have missed. Tesla weighing a sale of its China business to clear the runway for a potential SpaceX merger. That's not just a headline. That's Musk consolidating the empire into the one vehicle the market will actually fund. The market picks winners and forces the losers to pay. Tesla is the loser paying. Even Tesla is trying to sell its own future to pay for SpaceX. It rhymes with the whole tape. A few mega caps being funded while everyone else gets sold off. And the consumer? The consumer is alive, but selective. Carvana printed a record profit on used cars. Spider-Man set a $72 million preview record. People are spending on cars they actually own and experiences they actually show up for. They are not spending on staples, and they are not buying what the rotation is selling. Selective consumer, selective market. It all rhymed this week. TV, let's get the system story. Wave Trader was quiet, and that's the story.
Wave Trader scanned 321 signals this week and took exactly one entry. Sat on its hands while the grenade went off. Holding R ticker ARWR and U ticker U entered U on Friday. The cycle is around negative $140 right now. Not a flashy week, but the system did exactly what it was designed to do in chaos. Hand me a funnel, and when only one signal cleared, I listened. The discipline was the trade.
TF. T sat in the same seat. The book at $102,763, 71 grand of it sitting in cash. 2 new bracket entries. Friday, 42 shares of Amgen, ticker AMGN, green by 68 bucks. 121 shares of NextEra, ticker NEE, red by 116. 1 green, 1 red, mostly cash. 2 machines, 1 message, hand grenade week, don't chase. The discipline was the trade. Now the close and the bow on this whole week. The flat SPY is a lie twice. Once because 3 mega caps masked 500 losers, and again because the index is pretending to hike. Voting Fed doesn't exist. Right now, bonds are starting to say the quiet part out loud while stocks still pretend. When bonds stop pretending along with the ticker, that calm number breaks. The market paid for artificial intelligence this week and made everybody else foot the bill. Next week, the question is, who's paying when the pretense ends? Watch the 10-year yield. If it pushes through 4.74%, those Fed dissents stop being about last week and start being about September. Watch the artificial intelligence cash burn names with 2 quarters of negative free cash flow, and watch whether the mega cap rotation continues to eat the rest of the market. Because that is not a healthy tape. It's a tape held up by 3 names while the bill piles up. For TB, this has been Wildcard. Trade safe, do your own research, and we'll see you right back here next Saturday.